magnificent melon heads. Welcome to Tuesday morning live stream. I hope you guys are all having an excellent morning, like I am. It is Tuesday, it is midweek. We are 15 minutes from market open, and it looks like a pretty uneventful morning so far. Futures appear mixed. Let's shrink my big fat melon, get right into this stuff. Take a look at what we've got going on in the markets this morning. S&P down just a tick. Nothing to worry about there. Looks like the Dow is having a good morning. Up about 80. NASDAQ not faring as well, down about 30. Russell is flat. Oil down for a second day in a row. It looked like oil had ducked into the high 80s this morning, but it has since recovered some of that. So maybe a little bit of a short-term correction going on in oil. I don't know. It's certainly due for it. Let's zoom out on this guy a little bit. Let's at least look at like a 1-month chart here. I mean, oil's just had just a ripping month, a ripping 6 months if you look at it. So wouldn't be terribly surprised to see a little bit of a pullback in oil. But then again, there's not a whole lot of bear cases for oil right now. So all the market winds are still at its back. Gold's up just a little bit this morning, nothing big. Silver is flat. And the story this morning, keep an eye on this one, guys. Don't make me break out that chart again. It is 1.96% on the U.S. 10-year. We're approaching that big two-handle. Look out for that two-handle, guys. Brian Zarb, are you out there? Are you? I think I saw Brian Zarb in the chat earlier. Brian said 2% on the 10-year. That was the well, he didn't anchor at that point, but that was the lower bound of the range that he used. So we'll see what's going on. Yeah, I see Brian. Good morning, Brian. These video icons keep getting better and better. Thank you. I have been putting a lot of work in on my thumbnails lately. It is unbearably time-consuming, but all the research I've done said it's very important, so that's what we do. We must give the algo what the algo wants. And I see a lot of familiar names in the chat. Hello, Keenan Hayward, Cole Marsh, Mike Robin, Drew 2F. Some familiar faces and some new faces. Could these be some of the Lions over from Manarino's channel? Most likely. Hello, Jason Patton, MJ, John DiNardo. How you guys all doing this morning? Thank you for spending your morning with me. I must warn you guys, I don't know if you can see the bags under my eyes, but I am definitely not a morning person. That is why I never stray far from my wake-up juice when I do my morning live streams. But I do my afternoon live streams on Fridays, and I try to do different times so different people can make it. I don't want to do it the same time every day because you never know, it falls in somebody's commute or something. So trying to be a little more, I don't know, is democratic? Not demographic. I don't know what the word is, but trying to mix up my times a little bit. Yes, it is Tuesday, Cheshire Yeoman. It is Tuesday, and welcome. All right, so we are now, how many minutes from open? We are 12 minutes away from open. I got to show you guys something. This is, my youngest drew this for me. You know the kids are getting behind the YouTube channel when they start producing that kind of stuff. Isn't that great? That's my youngest. She made that for me. Also, a little preview of what's to come. You may, if you guys have been on this channel for a while, you know I've been covering the fertilizer story, and I've been talking about corn an awful lot. Well, apparently, these kids, they pick up more than you think. You think they don't hear you. Oh, yeah, they hear you. There's me. You see the resemblance? No? That's a good-looking piece of corn. So, more to come on that. We have a corn video in the works. Probably won't come out until tomorrow morning sometime, but that's out there. A little preview. All right, Mark the Silver Shark. I've seen 2.2 somewhere, but watch so many, can't keep up. All right, let's get back into that 10-year, folks, because that is the story, all right? I mean, I know there's stories out there going on about Peloton and about Facebook and NVIDIA, and those are the stories that get all the attention, you know, from Jim Cramer and his guys over at CNBC. But I'm telling you, folks, this is the story that you need to watch right here. The U.S. 10-year Treasury We are up almost 4 basis points this morning at 1.95%. And should we do the chart? I think we're going to do the chart. We're going to do the chart. There it is, folks. You've got to watch that purple line. All right, I've been talking about this for months. This is the line where something breaks. Okay, now it's not going to be like a to the minute, to the hour, to the day kind of thing. But every time the U.S. 10-year Treasury yield breaks above this downward sloping trend line since 1987, there has been some kind of mayhem in markets. Now, in 2018, we were above it for a little while. We actually spent a couple of weeks, even a couple of months above the line. So this is not a scientific hard stop, absolute zero kind of thing. But I have talked to some other chartist people, chart types, and some of them draw the line lower than me. Some draw the line a little higher than me. But look out, folks, because it's right around 2%, 2.2%, that trend line right now. And look, since the start of the year, where's the start of the year? Here we go. Since the start of the year, we have closed that gap by about 2/3 just since January 1st. We are making a beeline for that appointment with market mayhem. And I don't know if you guys saw my video that I did yesterday about how the taper is behind schedule. All right. The Fed bought $109 billion worth of assets in January. They were only supposed to buy 90. That means the Fed needs to accelerate that taper big time in order to meet their $60 billion target for February. And then $30 billion in March and nothing in April. So the taper has to accelerate. And the government has been on this borrowing bender lately. I think that's really what's driving up these interest rates. You've got a little bit of people front-running the Fed's rate hikes, but really, I mean, the government borrowed almost $500 billion in January. Ever since that debt ceiling got raised, they've been reloading the chamber in the Treasury General account, almost $500 billion that they just hoovered out of the economy, right? That's driving up the price of money. That's driving up interest rates. And, well, we're getting a lot closer to that line, aren't we? So keep an eye on that, 1.95. I don't know what's going to happen at 2. 2 is a big psychological threshold. So there, you know, when we hit that 200, I just when events like that happen, I just like to stand back and watch. I don't like to participate because the algorithms take over, the computers start trading against each other, massive amounts of money start flowing back and forth 1 trillion times a second. You don't want to get caught up in that nonsense, all right? I'm not a financial advisor. This isn't financial advice. But I don't want anything to do with that noise. I will let the dust settle and then see what the prevailing winds are and adjust my strategy afterwards. But watch that 2% level. That is going to be big. All right. I have got a whole lot going on here. Here's Brian. When we get above that line, it's between a week to a month countdown. Feel like New Year's Eve. All right, Brian. You're saying a week to a month. Interesting. Well, I can tell you when we get, I don't know if I do plan on shorting the market. All right. Again, not financial advice, folks. Please do your own research and your own DD and arrive at a decision that's right for you. I plan on going short the market by buying call options in UVXY, which is basically VIX calls. Now, that is risky because there is a lot of theta decay going on there. All right. I mean, that you need to be really right to get that one right because those calls will just decay away to nothing in no time. So I got to time that one right. And that is a very, very risky trade that I'm talking about. So please, guys, don't follow me into that unless you've done your homework and you're really looking at it. But when we get above that line, I do think that a fuse is lit. I really do. And Brian, you might be right. A week to a month. You know, it's not unheard of. Back in 2018, like up here, you know, we crossed over the line and stayed above it in July. And we didn't really have the mayhem until November is when the big market decline started. So we have spent a few months above this line in the past. Again, this is not a hard stop. This is not to say a panic will ensue at this level. This is to say that the conditions for a panic are present above that line. And you never know what is going to be the spark that sets that off. All you can say is it's likely. It's like Smokey the Bear and that sign, you know, fire danger is high today. That doesn't mean a forest fire is definitely going to start, but that does mean if some idiot throws a cigarette butt out the window, it's probably going to start one. And there's no way to mathematically model when that guy's going to drive by and flick that butt out the window. So keep an eye on that, folks. And also another useful tool is the MMRI, the Mannarino Market Risk Indicator. Now, I found this on the site. I don't know if Mr. Mannarino runs this site himself or if somebody built this around his indicator, but I did notice on this website, you see that there at the top, folks, in blue? Somebody went in there and added the MMRI, and there it is, the Modified Mannarino Market Risk Indicator in all its glory at 145 right now, and there's all the formula. There's a link to my video there, so it was very pleasant to see that indicator up there on the website. So I'm not sure if that was Greg Mannarino himself that runs that site or if somebody that is a fan runs that, but somebody took the time to write out to program that up. So that was very good to see. Also, I saw somebody did that on TradingView. We talked about that in my live stream last week. So we are at 145, and I see that they actually took the time to assign some risk levels. And I was looking at these risk levels yesterday. They said 150 to 200 would be high risk. I think I'm inclined to agree with that, although I might put the threshold for extreme risk a little lower than 200. But, you know, I thought on that long and hard, and I really struggled to come up with what levels I would say high or extreme. So we'll go with these nice round 50 numbers for the time being. I got a telemarketer calling me. Don't you love when telemarketers call you during your live stream? That may or may not be applicable to you, but it's really annoying. All right, so we've got MMRI at extreme risk level 165 plus, says Jay Reardon. You know, that's actually where I thought about putting the MMRI was at 165 because of that 169 level that the GFC started at. So that's a pretty good number. Who was that again? That was Jay Reardon. That's a pretty good number, Jay Reardon. I might put it somewhere around there if I really had to. 10-year max is 2.6, says Trav Sonder. Yeah, I don't think we get much higher than that, although Trav, I have a hard time believing we even get to 2.6, to be honest with you. I really do. Maybe we do. Again, we spent a few months above that line back in 2018. But that was the exception. I mean, here, we're going to bring the chart up again. Where is it? There it is. 2018 was the exception. All these other events, the dot-coms, the bond market massacre, the Black Monday, you know, none of them really went high above the line for very long. So I don't know. All right. What do we? Another site bookmark says 451 credit. Yep, that's a good one to bookmark. I absolutely agree. All right, let's not get too political in the comments, folks. We don't do that here. There is no shortage of places on the internet where you could have political disagreements. Try Twitter. That place is a toxic cesspool of political nonsense. All right, speaking of political nonsense, we did actually have a little bit of good news last night. I don't know if this is good news or not, but I did come across this one when I got up this morning. And this is in the Russia-Ukraine story. I don't know if this is reasoning prevailing. Let's hope. But it looks like Russia will pull troops from Belarus after these exercises that are going on. Let me just read a little bit off of this article. Russian President Vladimir Putin agreed during a meeting with French President Emmanuel Macron in Moscow that the troop station in Belarus will be pulled back once their war game exercises are completed. Although I would add, Reuters reported that Putin did not mention the agreement after the marathon 7-hour meeting with his French counterpart. So Emmanuel Macron and Vladimir Putin had this meeting, and after the meeting, Macron said Russia's going to pull their troops out after these exercises. Putin didn't say that. Macron did. Think of that what you want. There was some references later on in the article that mentioned some Russian advisors to Putin were saying that the troops were scheduled to leave anyway, so it's not like this was anybody backing down. So, whatever it is, it's certainly not bad news, right? So hopefully reason prevails in this case and it doesn't come to it. But just want to stay on top of that. Now, the one thing I did mention I did see this morning is looking at Dutch TTF gas futures. We're at 78.75. Didn't see a big reaction from European natural gas prices on this news. So if this really was a major breakthrough toward a peaceful resolution to this situation in Ukraine, I would think we'd see European natural gas prices coming down quite a bit from here, and they have not yet. So look for any kind of breakthrough at the peace table. I think will be reflected in these Dutch TTF gas futures almost immediately. So again, it's not bad news. Maybe it's not great news. Perhaps it was the mere sight of Emmanuel Macron that struck fear in Vladimir Putin's heart. Sorry, I couldn't. I had to make a joke. But anyway, it's good. It's good to see at least they're talking, right? If they're talking, they're not shooting at each other. So we're going to keep an eye on that one. Hello again from Sydney, Australia, says YouTube account. Hello, Sydney. What's the link to the MMMRI graph? Asked Mike Binder. Mike, it is Mannarino-market-risk-indicator.com. And there is a menu at the top where you can shuffle between the original indicator and the modified one. Twitter left LMAO. Yeah, I agree. Okay, can someone post it, please? If you're referring... All right. The Ukraine crisis is just to sell weapons and boost the MIC companies. Andrew, that is an interesting theory, and I'll be honest with you, I had always been of the impression that not necessarily the military-industrial complex, but that it was about deflecting public anger outward, away from our leaders over the economic situation. And we've seen it before. When economic conditions get difficult, leaders start wars to deflect their people's anger away from themselves. And I wish it didn't happen, but it's the way it is. Looking back now, market is open, and we've got yields are on the move again, 1.963, up almost 5 basis points. Are we going to make a run at 2% today? Oh boy, watch out, folks, watch out. Let's see what we got in the S&P. S&P is just barely positive, looks like it's heading further up. Dow is up almost 100 points. NASDAQ is pretty much flat, down 4 points, no big deal. The Russell is at 2,000. Oil down $1, still holding above 90 though. Gold and silver are flat. But yeah, the big story this morning, watch that 10-year, folks, 1.965. Let's refresh that, see if that's still moving. That is not good, folks. We do not want that one rising too far, too fast. All right. So let's take a look at our commodities chart, see what else is moving this morning. No big moves in precious metals. I was not expecting any. Again, energy down a little bit. Seems like oil and gas both down just a little bit. Well, U.S. natural gas is up 2%, most likely weather-related there. I am sick of this cold. Please, please be done with this cold. I'm ready for June. I don't know about you guys. Heating oil. Let's see. What are the grains doing? Looks like corn is taking a breather. Still holding above that $630 level. That is an important technical level that we have been bouncing around for the last few days. Let's put a 1-month chart up here. So it looks like it's trying to make up its mind, but still holding above that 630 level. And let's zoom out. We've had a pretty good, well, it's been about 6 months, this steady uptrend. Still nowhere near the highs from last April during that big commodities bull run that we had last year during the lumber nonsense. So we're going to keep an eye on this one. We have the WASDE report coming out later this week, the World Agriculture Supply and Demand Estimates. Keep your eye on that one, see if that sends any shockwaves through your grain markets. Because things in the South American harvest are not going well. There have been some droughts in South America, folks, and we'll talk more about that in my corn video that is coming later this week. You'll just have to sit back and wait for that one. All right, real quick, I also want to mention, while I got you guys here, that there are still just a few tickets left for the Ninja Nation meeting. We are down to just 3 tickets left for the VIP dinner the night before, and we are fast running out of spots for this event in Dallas-Fort Worth, and this is going to be a great time. I've already put a link in the description to this video. It's going to be on March 5th in Dallas-Fort Worth, and this is the Ninja Nation Speak Freely event. All the things that we can't tell you about on YouTube, we can talk about in person, and we've got some great folks who are going to be there, some great YouTubers. There's Joe Brown from Heresy Financial, the Economic Ninja, yours truly, Andy Scheckman, the analyst. We've got a lot of other folks who are going to be there. There may also be some surprise appearances. Some folks that you may recognize from Financial YouTube will be in attendance. So, again, it is a great time. It was such a real pleasure to meet some of you guys at that event in Denver, to put names on the faces, to put faces on the names to all these people that I have been interacting with in the chats during the live streams and in the comments. And I learned so much at that event. I met some really awesome folks, and I'm just really looking forward to this event in March. It's going to be a great time. So I hope you guys can make it. There is a link in the description. And again, if you're on the fence, you want to reserve that seat because there are not many left. And, well, if you wait until the day before the event, you may find that the event is booked solid. So, all right, let's take one last look at markets while we're here. We are at 1.963. Okay, it looks like they have pulled back just a tiny little bit. Got to keep an eye on those 10-year bonds. S&P is broke negative, just barely. Seems like markets don't really know what they want to do today. Although the Dow is having a good day, seems like that rotation into value is continuing. Oil still down. So, pretty uneventful morning going on. Let's see what we've got. Who would buy Peloton as they are green, says 451 credit. I don't know who's buying Peloton. Oh, I promised myself I wouldn't talk about Peloton, but how do you spell Peloton? There it is. Peloton or Peloton. Who would buy this garbage? It's an exercise bike, folks. It's a stationary bike. I get it. It's got a TV attached to it. And, you know, after you pay your ridiculously bloated price for this bike, you can pay a ridiculously bloated monthly price on top of that in order to have somebody cheer you on from this TV screen in front of your face while you're exercising. I guess that appeals to people who have money to burn. But you know what? During difficult economic conditions, who wants to take one guess what the first expense all those people are going to cut out of their monthly budget is going to be? Who wants to take a guess? It's going to be their Peloton subscription. It's going to be their expensive exercise gear. That's what they're going to stop buying. And if you want to know if we're at a market top or not, someone is thinking about acquiring this company. That's how you know a top is in. What's the valuation? $10.2 billion valuation for this company? No. I don't know if someone's just starting a rumor about an acquisition or if anybody is really serious about acquiring Peloton, but who in the world would buy this company, honestly? It's just a stationary bike, folks. There is nothing special about it. It's an overpriced stationary bike. And this is a sign that we are in a ridiculously bloated asset bubble. There, I've said my piece. Moving on from Peloton. Okay, Jay Reardon says the MMMRI per trading view is more accurate than the website. Currently states 165. Jay Reardon, the MMMRI on the TradingView site uses a different value for the debt number, for the federal debt. It uses the combined number from the U.S. debt clock, which also includes state and local debt. So you will get a higher read on the TradingView MMMRI. Again, I didn't program either of those. But it's up to you which number you think is the more accurate, the one that includes the state and local debt or the one that includes just the federal debt. Honestly, I could go either way. I really could. When I ran my numbers, I only used the debt to GDP ratio based on the federal debt. So you have to keep in mind, if you're going to use the numbers that are on the TradingView program, that you're going to get a higher number and that those historical numbers from the previous events should be higher than they were reflected in the video that I did. But I like both models. I look at both. Something to think about. Retail investors buy every dip, says LM Boyd. That's right. And, you know, that's a good way, again, to tell that you're nearing a top. When you see the CEOs, when you see the bankers are selling their stocks, but the retail guys are piling in and the margin buying is piling up, that's a good sign that something's coming. And the retail guys are always the last to react. It happens every time. But not melonheads, not lions, right? Not us. We don't get caught up in that nonsense. Peloton should connect to a Bitcoin miner and it would be better, says Yawzer Doinkosaurus. It's a great name, by the way, Yawzer Doinkosaurus. Yeah, let's throw in some crypto mining while we're at it. Why not? For Peloton. Hashtag end the Fed says, I cannot pronounce that. We're going to call you Nab. Nab? Yes. Hashtag end the Fed. I agree. We went, over 140 years in this country without a central bank, and we got along just fine, didn't we? Well, maybe we didn't get along, but the economy was doing just fine. We didn't need a central bank. All of a sudden, we have a central bank. Get rid of them. Let the free market determine what the value of a dollar is. Why do we need the Fed? That's just my thoughts. I just throw them out there, folks. I just throw them out. You do what you want. All right. 10 years still hovering, 1.961. Looks like we're coming back down a little bit. All right. Well, folks, I think we have been going for about a half hour now. We're going to call it a day. Again, take a look at that link in the description below and check out the Speak Freely event in Dallas, Fort Worth. Again, that is a good time. That is a fantastic bunch of guys. Going to be a lot of other financial YouTubers there, and I'm really looking forward to hopefully meeting some of you guys at that event. Watch those 10-year yields, folks. That's the big one. Watch those yields. And again, not financial advice, but don't get caught up in that Peloton nonsense. You don't want to try to predict that. It never ends well. All right, guys. With that, I think we're going to call it a day. And again, I just want to remind you that keep an eye on this one, too. Look at that resemblance. That's my little girl. She draws that for me. All right. Guys, with that, we are going to end this one. And until next time, live small and dream big.